Hey, good morning. This is John from Uplift Trade. Today is Wednesday, September the 10th. It is 8:07 in the morning in Europe. I hope you really are doing well, and let's try to extract some cash again today from the market. So what I see, quick observation from yesterday afternoon. I left the house mid-afternoon, so I was not trading, and that's when the whole part of the volatility occurred, but it is what it is. So we had price make a run above the high boundary of the range, and for the third consecutive time, one here, two here, and third one here, the price reclaim inside the range. So you can expect the lower boundary to be revisited. It's not a guarantee, but that's usually what you have to expect. Now price has made its way to the mid of the range and apparently has found some kind of support. We've got two bullish candles on the 4-hour that are finding resistance between the daily moving average as well as a quarter of the range area. So it looks like we are playing into a very tight zone. If I look at the 10 minutes, we have a low, and then we attempt to make a new high at 111,745. Revisit the low, revisit the high. It looks like price is ranging on the 10 minute. It's very clear. So even clearer on the 5 minutes. What is worth highlighting is where is the RSI on those high of the range is around the level 60. Yeah. So level 60 in a downtrend is a good place to look for short on the charts, regardless of the time frame. And we see the same happening on the 5 minutes. I'm gonna sneeze. Excuse me. I'll have to cut that. We see the same happening on the 5 minutes. It's a little bit more granular, so I'll be looking for shorts, because if I look at the 4-hour trends, we had, starting from this low, we had a high, a higher low, a higher high, a higher low, a higher high, and then we broke the ascending pattern of higher highs and higher low with this long bearish candle. So it doesn't mean that the whole trend is gonna collapse. It means that the previous uptrend is no more. And now perhaps we are ranging horizontally, consolidating. But it's important because it's not a place where to position for long. Yeah? Perhaps it's a good move to position for short. So that's what I'm gonna do. I have, like Peter Brandt used to say, or still says, I have strong opinions loosely held, which means I favor the shorts. Everything looks to be able to make new lows to the downside. I'll aim for perhaps, at least if the short works, at least this daily moving average on the 4-hour. Yeah. And then we'll see. But if I see that we take those two highs and there is some volume, then I will abandon the idea, at least on those particular time frame. Yeah? It doesn't mean that the overall trend is not going down anymore. It just means that right away, this is not what's at play. So let's keep an eye on it. And where is my short? And my short is, I don't press the right keys, and my short is right here. So I'm going to put a stop loss here, because if we get a triple top, and a triple top is possible, but it's highly unlikely, that doesn't happen every second day. And so if we take those highs, that means that price is going higher, and then I want to be out of my short. The entry is terrible. Could have been better. Ideally, I would have entered somewhere here, but it is what it is. So let's keep an eye on it. I've got some more opportunity to add to the position. So I'm going to add another quarter of a contract at this level. That means the whole position is half a contract, currently at 111,501. And the stop loss is $124. I still expect price to head lower. So let's keep an eye on the position. All right, as you can see, this position was a quick one. I just got stopped out for $124 as a loss. So I'm going to add this to the books for today. Minus 124. And I will keep looking for another trade. All right, let's continue watching the price action. I am considering the idea of playing catch up. This looks like a good breakout enough for me. I'm going to add a contract. I know it's the top of the range, but in that case, then I will get stopped out, and that's fine. Notice that I'm not adding a stop loss just yet, because I would like to see the close of this candle will tell me whether I'm right or wrong, meaning that I expect the move, which is a breakout, continue right away. If it does not right away, then it's likely that I'm not right and that the price is not ready to kickstart the move. In such case, I'll close the position right away. So that's why I'm not putting a stop. On the other hand, if I see that price is actually doing some sort of breakout, I'll tag along and I will add some more to the position, and then position a stop loss right underneath the low of this candle. So let's keep an eye on it. All right, it looks like price is willing to go to the upside. Doesn't have yet a lot of conviction. I'll be watching this level here, see how price react, and especially the tape. But so far it looks good. I'm gonna add another quarter of a contract on one tick higher on this, above the high of this candle, and I will immediately put a stop loss. So I'm not putting the stop loss underneath the low of this candle, because just underneath are the moving averages, and if we start a new uptrend, regardless of how long the uptrend will last. The moving averages are often used as support when price is... I don't want to get stopped out on the search of a support during a small pullback in an uptrend. That would be a pity. It's actually a good area where to add to your position. Let's keep an eye on it. It's been roughly 10 or 15 minutes, less than 15 minutes since I posted the recording, and now price is making a new high, but appears to be stalled underneath this liquidity void here on the 5 minutes. So I do not exclude a pullback towards the moving averages at this point. If that occurs, then I will add onto the position another quarter of a contract, regardless of where it dipped. Now, if it dips below the 21 moving average on the 5 minutes, then I will entertain the idea of closing the position at the moment, because the thought process is the following. We had this horizontal level at 111,804, which was broken and perhaps will be retested now. Doesn't have to be, but perhaps will be retested. If we dip way too deep into it, then this move above this 111,804 maybe a deviation, and then we will get back to the low boundary of the range towards this level here at 111,000. So I'm going to keep an eye on it. Now, if we push and make a new high, tap in the liquidity void, actually, I'm going to do it right away. I'll position a stop buy order above the high of the most recent swing high, just to capitalize on the move within the liquidity void. I expect this to accelerate a little bit. Either there will be a ton of rejection at this level if we approach it, or we'll get through with a lot of volume. It's either or. My stop is in place, 128. I'm not moving it at the moment. I'm just watching what the price action is doing. It appears that price has found support on a pullback directly at the 12 moving average on this 5-minute chart, and now is making an attempt to a new high. So I'm going to add to the position another quarter of a contract, so that will bring the total at 3/4 of a contract for the position. And as soon as it's refreshed, I'm going to move my stop underneath the low of this candle right here. I'm losing internet connection. Fantastic. Okay, here we are. One contract, 125. That's too much. All right, the position is in. I did fat finger the last buy order at market, and my current stop loss is now moving back up underneath the low of this candle. Okay, so the stop loss represents $225 of a loss. That's a bit too big. Okay, we're good. And now my stop loss is gone. There's such a lag. It's terrible. Really is terrible. We have a stop loss at $180. We have a full contract position, and we have additional quarter of a contract on the break of the high of this candle just before the liquidity void, because the assumption I make is that if we make a run to the high of this candle, then most likely we break it, and just underneath, just after that level is the liquidity void, and we should get, price should get sucked inside rather quickly. So I will have a large position. Usually maximum is one contract in this particular setup, but I'll leave it like that. The risk is fine. $183. It's okay. I can live with that. And we'll readjust the stop loss perhaps underneath the low of this candle when the additional quarter of a contract is triggered. So let's keep an eye on it. All right, we've got some movement in the price action. So price is making a new high, and so triggered my last quarter of a contract buy stop order. Position is in at 111,884 for a contract and a quarter. And I'm going to immediately move my stop underneath the low of this candle, which touched the moving average and served as support. So the current risk associated to this unusually large position is $181. Now I would like to see a look on the 10 minutes. We made our way, price made its way just within the last part of this bearish candle, and also is attempting to consume this inefficiency into the liquidity void. So I'd like to see some more follow through within the liquidity void. I was looking at the aggressive buying side, some 18 contract, 12 contract, 19 contract. There is not a ton of aggressive selling at this level, which is a good sign. There is only passive selling, which is fine. Let's keep an eye on the position, but it looks good. I will be dynamically managing my stop loss. If we make a new high within the liquidity void, I may actually move the stop loss underneath the low of this hammer candle. All right, let's keep an eye on it. All right, the follow through I was looking for within the liquidity void just occurred. So the entire portion of the liquidity void on this 5-minute chart was completely consumed. Position is currently 446 in profit and climbing. And so I'll be carefully managing, or should I say looking at the tape. We are getting very close from a break candle as well as another liquidity void. So perhaps this level here, if you look on the 10-minute, is 112,340 and some change, give or take, is providing, will be providing some challenges. But so far it looks good. I'm moving my stop, just not yet break even or above break even, because I think there is still some room in this move. If you look at the volume, the previous candle is a nice bullish candle and it consumed a lot of liquidity, but the volume is the highest on the 5-minute it has been since, look to the left, since we dipped to the low overnight, or should I say yesterday evening. So let's be cautious here on the volume. It's probably a telltale sign that the top of this move relative to the structure we're looking at is probably forming or in, and I would like to avoid being trapped at an inflection point. So let's keep an eye on it, but it looks good. All right, price is making its way towards the level I was highlighting earlier at 112,383. If you look on the 10-minute, you get the whole picture in the top left corner. Now my position is 1 contract and a quarter, so I'm getting ready to take out a quarter of a contract, which means a fifth of the position, just perhaps as price is making its way towards this level, as I expect some rejection to show up. Might be wrong, but can happen. So there we go. I'm taking we're getting out past the level. So current profit is 643. I'm taking 712 for the whole position. And I'm taking a fifth out as a profit. I just wait for it to refresh. 712 and a fifth. That would essentially be 142 profit. Today, the internet connection is really terrible. Okay, it's gone. So that was what did I say? 142 on profit in the books. Okay, let's keep looking at the position. It looks good. I'd like to see one thing to support the idea that we're going to make a run through in this current move within the liquidity void is the absence of strong volume at this level. If there is a ton of volume at this level, that means there is a lot of interest on either side and it's most likely an inflection point. And so I'll be exiting more of the position, but so far it looks good. We're making a breakthrough and we have less volume than the previous candle. So this is looking good. Let's keep an eye on it. Price is making its way higher within the liquidity void and we are getting very close the high boundary of the range I was highlighting yesterday. So I'm going to take another quarter of a contract, which is a quarter of the position, because I still have one contract. I'm gonna take a quarter at 629 and let's wait for it to refresh. So 629 and a quarter is 157 locked in. Now I can see that the position is climbing even higher, but my current status hasn't refreshed. One thing I haven't done earlier, and that's a mistake, is to move my stop. I'll put it higher than the break even, or at least I protect myself for this particular trade. I'm still one contract. Okay. 3/4 of a contract is left and price is very close to finishing the liquidity void and there is no aggressive selling as we reach the high level of the range. You can look at the tape, it's only minor aggressive buying. There is no aggressive selling and there is a little bit of the liquidity void left. And then after, it's not go time yet because we still have this level. More or less. I'm gonna take another quarter of a contract at 503. So 503, and that represents a third of the position that I'm taking out. 503, and that's 167 in profit. Let's wait for the position to refresh and we'll keep an eye on it. I may leave the position as is once it has refreshed because it would be 4/2 of a contract and I can live with that. There is perhaps a tiny bit left into this move and I want to capture it. This is really, really annoying. I know that the order has been sent, because it's not the first time that it happens and I can see in the history of the transaction. The timeline is more or less accurate, a few milliseconds. Okay, so now it has refreshed, so position is in for 1/2 of a contract. Current profit is 322, 2 minutes to the close of this candle. So now the volume is getting very thick and it's a bearish candle. So maybe we get a push higher and I'll close the position right away. So let's wait this 1 minute and 40 seconds together to see how the candle closes. On the 10 minute, we have an increase of volume. We are not as, we are very similar to what we had yesterday on the bottom of the move on the 10 minutes. The 4-hour candle is closing in 1 minute and 21 seconds. So what I'm gonna do, I will close the entire position in 1 minute and 20 seconds because we've got a new 5-minute candle, we've got a new 10-minute candle, and we've got a new 4-hour candle. And I don't want to get trapped into a pullback. I'll get to exit everything, and if pullback there is, then I will re-enter the position on the long side. I'm not shorting this. You can see that the volume on this 4-hour candle is higher than the previous candles, so I will not be shorting. I will be waiting for a pullback if there is one, and I will position myself. 40 seconds to the close of this candle. Current profit is 327. It's 1/2 of a contract position. There is a tiny bit left of this liquidity. Ideally, you would want to see it taken and exit the entire position for peace of mind, but if this is not taken by the close of this candle, it doesn't matter, I will close everything. 26 seconds, the volume is getting nice on this bearish candle. It means a lot of interest at this particular level. We're making a higher volume than the candle before, and it's a very short body candle. So yeah, getting ready to exit everything on the close of this candle, and the profit is 334, and I'm out. Right, that was a good trade. So 334 profit for this particular trade is 334, 167, 157, and 142. That's $800. Round number, $800 on this trade. That's very good. So I'm going to pause the recording, add this to the book, and look for another trade. It has been somewhat 20 minutes since I paused the recording and closed the entire position, and price has made a run through within the liquidity void, the remaining part of the liquidity void. I have no intention to re-enter the trade at this moment. I would prefer to take a break and come back, I don't know, in an hour or so and see where the price action is at the moment. In any case, first trade of the day was a short that ended up being a loss for exactly $124. Second trade, I went long on the break of a consecutive 2 highs on the 5-minute and generated $800. I was able to get out of the position in partials, meaning I was closing portions of the position at a time at certain level that to me were valuable. And yeah, so that's a good start of the day, and we'll see what the rest of the day brings. In any case, I'm gonna stop the video and create a new one later on, so this is the end of this video. If you stay till the end, thanks a lot for sticking around. I really appreciate that. It's not always easy to trade and trim and edit the video in parallel. It's a lot of multitasking. But in any case, thanks a lot, and I'll be speaking to you very soon. Take care. Bye-bye.